Bit of a blip in the share price, but not when you put it into perspective of how far you've rallied since they first went public. I'm interested, Paul, on the average selling price issue, and that seems to be what's given the investors a little bit of a wobble. What do you think about the ongoing trends for prices of the cars you sell?
Yeah, it's a very interesting dynamic and some of the reaction that we're seeing, Caroline, because we had a very strong second quarter. Our e-commerce unit sales were up 74%, and we're seeing just incredible demand for the Vroom model come in. But we've also seen a very interesting transformation of what customers are looking for, and it's lower priced cars. And so while we were able to actually match that demand by getting the supply of lower priced cars, of course, that brings down total revenue. And I think that may have iced some of our particular investors or the street, because they didn't really understand that we were still able to increase our gross profit per unit even as average selling price of cars came down. So we actually found it to be a really validating second quarter, and we thought that we gave really constructive guidance ahead of our original plan, because we've got strong unit growth, strong monthly sequential unit growth. In addition to that, we're also seeing strong growth on a gross profit per unit basis. So we're very encouraged, and we're going to follow demand appropriately. And as long as we continue to deliver the metrics on a per unit basis, we're really confident in the long range plan of the business.
But then with regard to some of those margins, Paul, where do you, I guess, get a little bit more out of it? Is this just simply about your own acquisition costs with regards to getting those vehicles? Or are there other areas that maybe you can work with that would preserve some of those margin expectations that the street has?
Yeah, I mean, one of the things that we've done really well, especially in a difficult time with the backdrop of COVID, is apply data science to our acquisition. And by being able to match demand and supply, and then understand what's the right price to pay for our vehicles, and then what's the right price to charge customers, we see, again, real strength in being able to deliver gross profit per unit, and at the same time deliver great value to our customers.
Talk to me a little bit more about the longer term trends that you're seeing. We've talked a lot about some of the lower priced cars, and I'm understanding that given the economy that we're in at this moment, and particularly the appeal of an online purchase. But the high-end cars, are consumers comfortable purchasing a big ticket item online? And when do you expect that demand come back for those high-end purchases?
Yeah, I mean, I think uncertainty always, and these are very large purchases. As you know, these are the second largest purchase of someone's life. So I think greater risk at higher priced cars, there's still a market for those, and we still sell those cars. But the largest chunk of demand is actually moving a little bit south. Again, we've seen that come down $4,000 to $5,000 to about $23,000. So that's where the meat of the market is. When it comes back, I think that that's anyone's guess. But Vroom is agile enough to be able to have that supply when we see that demand come back. So I think we're in a very strong position.
Paul, we're lucky. We're really into this business model at the moment. And just yesterday, we were speaking with a pretty key rival of yours. Of course, Ernest Garcia of Carvana was on with us yesterday. I just want to have him play out what we heard from him yesterday in terms of competition. Take a listen.
It's natural when you find something that customers love, more people are gonna create a similar offering, and we should expect that. We should expect it to continue. We should expect additional entrants to emerge. But I think if we stay focused on our customers, we expect to maintain our leadership position, and so we're going to maintain that focus.
Maintain their leadership position. I'm interested, Paul, on how you see the competitive landscape as it stands.
Yeah, look, I think I fundamentally agree with what Ernie has to say. We're focusing on our business. There are 43,000 dealerships in the country. There are 40 million used cars sold a year, and the largest single shareholder in CarMax has about 2% share. So models like Vroom and Carvana are disrupting the status quo. And so we're going to focus on our customer. We're going to focus on our business. And when we deliver great service for our customers, the business will scale and will take share. So I think we agree.
So with regards to your other competition, I mean, you mentioned the dealer network out there that obviously has sort of been entrenched in the car buying process. You've obviously benefited from the pandemic and the shift more people to trying to shop online. I'm curious if you look at some of these dealerships that have then taken it upon themselves to create more of an online model to potentially, I guess, compete with someone like Vroom. Are you worried that those dealerships might be able to catch up to what you already have here?
Yeah, I think there will be many that will try. There's a big difference between having a website and being an e-commerce company at scale. There's a big difference between delivering a car in your local neighborhood and having a national logistics network. What Vroom has built is an end-to-end e-commerce where you can do everything that you could possibly do in a dealership, but do that completely online. And then we actually bring the car to someone's home. So building an e-commerce company in conjunction with a world-class automotive company that's just not an easy task. And we think that as we get smarter, as we build more data, as we scale, you start to create a moat that gets deeper and wider. So I think that some will be able to certainly figure it out, but many just won't be able to compete.